Let's now get in Vikas Pershad, Portfolio Manager, Asian Equities at M&G Investment, now joining us on the show. Vikas, great to have you and delayed season's greetings to you. So, well, the big trigger for the Indian markets, at least on the global front, is the possibility of an India-US trade deal. Now, over the weekend, and I'm sure you had a chance to go, the Mint reported an article that a framework deal between US and India is ready that could slash tariffs from 50% down to 15-16%. And this was likely to, get agreed at the ASEAN summit next week. But now what we learn is that the Prime Minister may not attend that meeting. So does that push back expectation? And what is your own expectation of a possible India-US trade deal?
Good morning, Rima, and happy Diwali to the CNBC team. Our base case has been that these trade negotiations with the US have gone on too long already. A deal will happen. It will help some of the companies that you were highlighting in the previous segment. And whether it's the geopolitical issue among India, Pakistan, and the US, which is tricky, or Russia, India, and the US, which is also tricky, we view that in the long term, it's in the best interest of the US to be closely aligned with India on trade, on geopolitics. We know that India doesn't have a policy of full alignment, formal alignment, but a trade deal will happen. It's in the best interest of both sides. And we remain fully invested in India. The setup for Indian equities is quite positive heading into 2026. We still have a couple months left in this year, so we're not looking forward just yet. But when you look at the underperformance of India relative to other just Asian markets this year, China alone was up 20% in Q3. The Korean market is up nearly 70% in dollar terms, 70% year to date. And while the India long-term story is intact, while we have soon, we think this catalyst of a US trade deal, the markets have been underperforming. So this is a great time. This is a great setup heading into the new year.
Vikas, hi. So, the thing is, foreign ownership has been at record lows here in India, right? Do you believe the tide is turning decisively? And if yes, which part of the market looks most interesting to you right now?
Well, Rima spoke to Deepika a few days ago, just before Diwali, and one of the sectors that we highlighted was defense. We became overweight this sector in 2022, not long after the Russia-Ukraine conflict kicked off. But we have a larger overweight here now, more than 3 years on, than we did at that time, because our conviction in this trade is greater, this investment actually. So defense we still like. Within the autos and auto parts sector, we have been overweight the space this year. We have shifted some of our allocation from the OEMs to auto parts. That remains very interesting. And we're seeing a lot of very interesting IPO companies listing through the public markets in that space. There were some earlier in the year. There are some others coming up. On the point of IPOs also, we're sifting through a lot of these. India has been the most busy IPO market in the world in the post-COVID period. Nearly 1,000 IPOs already from the start of calendar 22. It's the busiest market again this year. 1 in 3 IPOs in the world has happened in India this year. Many of them have been small, or most of them have been small, I should say. But there are a lot of very interesting small and medium-sized businesses coming public that investors should be spending time on. The initial trading bump has been lowest, actually, in India compared to other markets. China has led the way in Asia this year. That is also another opportunity for long-term investors. And so defense, autos, auto OEMs, and parts, a range of companies in the IPO market. I should also add where we remain underweight. The IT services sector, we have one of our largest underweights there across the portfolios. This is a sector we have been very overweight in the past. Nothing we have learned in the past 3 earnings seasons, the last 2 quarterly results periods, has changed that. In fact, we're more underweight here than we had been at the start of the year. Consumer staples similar, but on the consumer side, partly because of GST and other reasons also, we have reduced some of that underweight.
Hi Vikas, good morning and good to see you in. Nigel on this side, extending greetings to you, your team, as well as your family this Diwali. That said, I wanted to view actually on the AI themes. In India, we have missed out on that big AI rally. But what's your view on this entire AI theme? Sometimes that enthusiasm gets into euphoria. Do you think AI is gradually getting into that bubble territory, particularly in the US markets, because they've driven most of the gains out there? Most of the capex is being accounted for on AI itself, and some of those stocks have gone through the roof. So what's your view on this potential AI bubble? And since India didn't participate on the way up, potentially, if there is a bubble, then we stand to gain, because now our companies are making that move towards focusing more on AI.
That's an important question, and one that we think about very often. So, are there large portions of the global equity markets in a bubble territory? Yes. It's not just in the US. We would say the same for several of the key markets in North Asia, in China, in Japan, in South Korea. Where we have had exposure, we have taken some profits in the past month. Where we haven't had exposure, we think that a lot of these companies in the AI supply chain set us up well for outperformance as a result of their underperformance to come, given how much they've run, how materially they have been re-rated. The AI trade has been absent in India. If anything, the IT services sector has been an anti-AI trade. There is some reason to believe that some re-rating could happen if the AI bubble starts popping around the world. Our view is more on a long-term fundamental basis, which is why we are underweight. But there's also the AI capex is coming to India. If you look at the announcement from TCS when they reported a couple of weeks ago, and how some of the moves in the telecommunications sector moved immediately after that. There is, if you look, opportunities to invest in the AI theme in India as well. It's not as broad and deep as it is elsewhere, but that's also part of the appeal of the Indian market. You now have a market with over 6,000 listed companies and nearly 2,000 with a market cap over $100 million. There's a very broad and deep universe for active managers with a long-term horizon in India, which is, again, what is exciting for us. Now, to build on your point about what happens if capital starts leaving the AI trade, some of it absolutely should come to India. There are other reasons for more capital to come to India next year, perhaps, as Korea gets the bump from emerging market status to developed market status. It will happen eventually, if not 26, then 27. So there are various catalysts on our time horizon, in which short-term means 3-4 years, which makes us very excited about Indian equities.
So Vikas, the setup for India looks constructive, as you said, for 2026. But what is your own view on how emerging markets are likely to perform next year, considering that India does compete with emerging market for flows?
It does. If you look at most of the main emerging market indices, India and China account for about half of that. And we remain constructive on Chinese equities. Our sector allocations might shift. We just touched on the AI exposed names in North Asia and China in particular, where we have taken some profits, or we have not participated in some of the bubblier names in sectors. But India is also a very large portion of that. India should benefit from that. As non-US equity markets continue to attract capital, and that trend reversed a little bit in the summer because of the semiconductor names that are listed in the US, the AI names that are listed in the US. But our view is that over time, in the next few years, this long-standing divergence that we've seen between the US and the rest of the world should reverse. There should be a convergence here, and India and China are likely to lead the way.
Okay, all right. Well, we'll see how that shapes up. It's been quite a wait for us here in India in terms of the equity action. Thank you very much for joining in, and wish you a good rest of the week as well.